Good afternoon. It is Tuesday, August 6th, and it is 3 o'clock, and this is a special meeting of the Jefferson Public Utility District Board of Commissioners. My name is Jeff Randall. I am president of the board, and I am calling the meeting to order. Jefferson PUD will be offering both virtual online meetings as well as in-person meetings unless advance notice is provided. Online participant audio will be muted upon entry. Please unmute at the appropriate time to speak, and if you're calling in, use *6 to mute and unmute. To mute and unmute, and *9 to raise a hand or to request to speak. So let's start with a roll call. I'm Jeff Randall, Commissioner for District 1 and President of the Board.
Kenneth Collins, Commissioner District 2.
Dan Tupper, Commissioner for District 3.
We are all present. Next item on the agenda is the agenda review. Do we have any changes to it?
I'll make the motion to accept the agenda as presented.
Second.
All in favor of approving the agenda, please indicate by saying aye.
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 We are unanimous. Okay, we have one item on the agenda. It's the PUD 2023 financial audit. And we have here today representatives from Bollinger, Seegard, Gilbert, and Moss. And it's Tyler?
Yes, sir.
All right, Tyler and Kennedy? Kennedy, all right. From Lubbock, Texas, welcome.
Well, I appreciate y'all having me, and Commissioner Collins, good to see you again. So,
And before you start,
yes.
I'm going to say a thank you for Tyler and his team to come in and work with us. I believe they've been a great supporter to the PUD, has helped us get a lot of things moving forward, like in the work orders, things along those lines that we appreciate the help and the guidance that you guys have given us. So thank you. Thank you for being here.
Yeah, I mean, I would like, just to say thank you to Tyler and his team. They're a great team to work with. You know, we've learned a lot from them. You know, hopefully they've learned a little bit about PUD from us and, growing, but, we've had a lot of opportunities to work with him. He's been a day here helping to answer some questions that Amanda and I had, just so we can continue to make our reporting better, our finances better. And, just a shout out to him and his team. They stepped in last year and, for the first year in a time of need, and really hit the, ground running. And then last year, they did a really good job with it too. And I think we're getting to become a better PUD by having them do our audits. So I do appreciate Tyler coming up here today to present the audit to you guys, to the commissioners, to the public. So go ahead. So there you go, Tyler.
All right. Thank you so much. And I appreciate the kind words from me and hopefully our firm in general. So so we're done with the 2023 audit. This is kind of the results presentation of important financial matters that we're seeing as a result of what's in the audit report and the audited numbers, as well as kind of some ongoing things that we're working with staff that's not necessarily material to the financial statements, but process-wise, I think has some long-term impacts on you all, and I think is just important to have this discussion. And if y'all have any questions, I just want to make sure that you're aware of stuff that we got in the fire. So can I share the screen?
Be able to share the screen now.
Okay, so I'll
Yes.
do that. Do this. Okay, so
Switch because we're on the
what's that?
presenter view, not the slideshow view.
Oh, did it not update the window?
Nope.
It's all cotton. Yeah, we don't have much cotton around here.
That's a saying.
Okay,
It's
stop
not like
sharing.
high cotton or high cotton.
All cotton.
Okay, make it big and then share.
Maybe, yeah.
I don't think I can do that.
No.
Nope.
Well, it kind of knows Zoom a little bit better. You might be able to help.
Can you get that full screen, this presentation, full screen, shared window?
Yeah.
So
I was trying to get the presentation here set up so we can see this full screen and not the presenter view.
Okay, and we're gonna go back to
Zoom.
There.
Here?
Mhm.
Okay.
This chair squeaks just like.
Window and screen.
Maybe we both have.
And.
There we go.
And it didn't.
Let's take a second. Usually.
You have music playing being on.
Boy.
It's not open.
It is, but it's not doing it in the. Okay, try hitting slideshow again.
We can start.
No, I think we're just gonna have to do it.
Roll with it.
Yeah.
We can start
Okay.
singing the Alabama song.
I think that's as good as it's gonna get.
Right, you might want to
Okay.
zoom in a little bit.
Okay.
They're not forgotten.
You're not-
Okay, so I think this is as good as it's gonna get.
So you might
For-
go back to the beginning now.
No, I was gonna start here. So,
Okay.
so, I think this is, it's the last page of the slide, but I think it's the most important page. It contains all of the reports that we're giving to you all. So when you engage us to do an audit, you're engaging us to do several things for you. You're engaging us to give you an opinion on the financial statements. Through generally accepted government auditing standards, you're engaging us to give you an opinion on your internal reporting, internal controls over financial reporting. And then we also issue a letter at the conclusion of an audit with our comments to governance. So this is certainly a condensed view of those statements, but I think I've summarized here for you our results. And if you have questions, just stop me along the way, and I'm happy to cover what it means or what we said.
And I actually do have a question for Mike and for the record. So this is an audit that the PUD is paying for privately. Does the state auditor's office do their own financial audit of us, or does this replace what they had done in the past?
No, so this does replace what the state auditors does for our financial. They have to do a peer review of the report submitted by Tyler and his team.
Okay,
And they have to accept it, which we've done that since we had Jackson Thornton doing it too.
Yep.
In lieu of the state auditors coming in and doing their own financial audit.
right.
So-
And I realized the issue with that was their timeline. They weren't able to meet our RUS deadlines for submitting reports. So
Correct.
but they're still part of the process because your report will
Yeah.
go to them. Great.
Yeah, so, last year was my first year being a part of the Washington State Auditor's Office field audits. And they come in and they request access to our working papers and make sure we're doing the audit the way they would have done it if they had completed the audit. And then they should give y'all an update on anything they would have found that they maybe had an opinion on differently than us
Okay, thank you.
after they do that, so.
Great.
So as far as the work we do, so we come in and we look at your trial balance or the financial information that's in the accounting software, and we design procedures to address the risks that we see in the financial statements. And from those procedures, we derive an opinion on the financial information. So for 2023's audit, as of December 31st, 2023, and the year ended, we issued a clean or an unmodified opinion on the financial statements. And we issued that opinion as of March 26th, 2024. Certainly, in May, I had something come up, so a sickness, and I was not able to be here, but thank y'all for having me today to present this. But we did get that turned around in time to get it available for your lenders that require that each year. So that was certainly something that when we agreed to do the engagement, we agreed to be a part of doing that for y'all. So the second thing that we give you an opinion or a negative assurance on is the internal control over financial reporting and non-compliance. And we issued a report that was free of any noticed material weaknesses or significant deficiencies for 2023's audit. So as far as what that means is when we come in and do an audit, we don't specifically design procedures to detect internal control deficiencies or fraud. But if we run across anything when we're doing our procedures, we're required to put that in writing to you all as a part of our auditing standards. And so what we're saying is when we were doing our procedures based on risk, we didn't come across anything that we believe qualified for a material weakness or significant deficiency. And so the definition of a significant deficiency is a error or a combination of deficiencies that would lead to a material misstatement if not corrected in a longer period of time. A material weakness is a higher form of internal control deficiency, and it would lead to a material misstated financial statements in a shorter amount of time. So we're saying that the processes that we see here are overall giving you financial records that reflect accurately here at the utility district. So our SAS 114 letter, or what we call the letter to governance at the conclusion of an audit. This is a summary letter we issue to for every audit that we do at Bollinger Seegers Gilbert and Moss. And the main things that we would state to you in this letter is if there's anything that affected the comparability of financial statements. So new standards are a lot of times what would cause that if the accounting standards changed, or if we're changing any significant estimates from year to year, anything like that, we would communicate that to you all. We noted none for 2023. We didn't have any disagreements with management. I think that's another important thing to disclose. So if we come in and we make a recommendation or a journal entry and we prepare it and give it to management to be made as a part of the audit, and we're getting significant pushback, it'd be something we need to talk about with you all when we come here to do this. And that's something that we did not encounter for 2023's audit. And then I think overall, it's just fair to say that the records appeared to be in good shape based on our audit for 2023. So if you all travel to a lot of the accounting conferences, they may be talking about non-attest services. So you don't want your auditor doing a lot of services that are considered non-attest services for you, because that could lead to a appearance of a lack of independence or an actual lack of independence on part of the auditor. And so I think it's important to disclose to you the non-attest service that we do provide, and which is listed in your engagement letter for 2023's audit. We are drafting the financial statements and giving those to management for review. And we also have safeguards in place at our firm to make sure that we're not issuing draft financial statements that are materially misstated or missing disclosures that need to be in there on a year-to-year basis. And so we are still providing that non-attest service for 2023's audit. And then some just important notes from the audit. I just wanted to bring these up, and if you'll have questions along the way. So this is some of the ongoing recommendations or conversations from the audit, since y'all aren't here on, when we're out here doing the work. I think that these are some things that we're working on or made recommendations on, in 2022 or 2023's audit. And I just wanted to run those by y'all and make sure that we're all on the same page. So one of the big deals for 2023 audit was that y'all brought the treasury function in-house kind of at the end of the year. So it was kind of that's a large change to go on process-wise, especially at the end of the year when you're looking forward to your financial statement audit and our results that we're going to disclose to folks and give that information to people. And so that was a huge task. And I think that really Mike and the accounting folks really digested that as well as they could, giving the time frame. But there was still some stuff that we had to work on there, and we're working on still in 2024 timeline. But I think it's y'all have implemented the bank reconciliation software through NISC for daily deposit management. I think some real steps have been made here, especially in 2024, to make sure that this isn't an ongoing issue that we report to y'all year after year. And it appears to be really moving in the right direction if you look at 2024 decisions that have been made here at the utility district.
So this is probably a question for Mike, and if I heard what you said there, a little bit of what you talked about, was this our transition from being in-house now rather than going through the treasurer's office? Is that some of what he described there, what they looked at?
Yeah, so some of that is because how we account for, the reconciliation of our cash accounts, our bank accounts kind of switched because we brought a lot of functions that were being done in-house with becoming our own treasurer. Amanda, who's here today, has taken on part of the bank reconciliation stuff. I mean, she did a little bit trying to balance it back to the treasurer's office, which gave us some trouble to do it, just trying to understand their reports, their timing and stuff. So that's one of the things that he's talking about, is us bringing this in-house. It's just been better for the PUD to having all this stuff in the house.
So is that transition completed now then, with moving over from the county treasurer to our own in-house?
Not quite yet. We have 2 outstanding warrants with the treasurer's office that will probably get voided in October, just because they're over by October, they'll be a year old and no longer valid warrants. We'll bring those back. They will still collect the tax money for us and provide that to us, but they won't have any actual banking functions with them.
Thanks for the clarification.
And Commissioner Collins has his hand up too.
Yeah, going back to the non-attest services provided, if you're involved in drafting the financial statements. I'd like to not naively ask if there's a potential here for a conflict of interest.
So I would say, across our client base, probably less than 5% of our clients, draft their own financial statements. So it's a really low percentage of folks. We have safeguards in-house at BSGM, and certainly we get peer reviewed in-house on how we apply those safeguards. We consider that to be a normal non-attest service as we portray it for our client base at BSGM. With our safeguards in place, we don't believe that there's any room for lack of conflicts of interest. As we're doing that, we're looking to maintain the standards, and the numbers don't really matter when we're drafting those financial statements. We're really just making sure that disclosures and the notes to the financial statements reflect all of the applicable standards that would be required to be used under generally accepted accounting principles. That's our main focus. When we send that to in-house review with the management level, certainly there could be a conflict of interest there. And we think that our safeguard goes past that and is in place to control any conflicts of interest. And we're certainly looking out for that with results to financial information.
Thank you.
Yes, sir.
Please continue.
Okay. So another important thing, and I don't know that any of these following, that we're listing here are, none of these made the listing of material weakness or significant deficiencies. They're at the level of conversations. And so use of proper methods on inventory spreads. So the NIC accounting software has, we think, a better way of allocating stores overhead distributions, which relate to minor materials. And so the current method of doing that, we don't believe reflects that process correctly. So we're advocating another way of doing that. And we talked about that earlier this morning. We think it could probably be fairly easily implemented. So a unique thing to Washington.
Tyler or Mike, I don't know who would best
Yes.
take that, but it's interesting when we hear how NISC has a function that we could use that we aren't fully using yet. And it sounds like that's another example of one for using it to help you with your inventory.
So we're using a function with NISC to spread our miscellaneous non-inventory items. We're doing it through our payroll secondary distribution instead of through our material inventory module. So it's one of these ones where, yes, we just haven't been using the right system, the right way to do it within NISC. The way we're doing it, it's not horrible. But it's following employees' time,
Right.
labor hours, and not where the material's going to.
Okay. And I think and
There's a more direct correlation, we think, between where those dollars should follow and where they are currently.
right. And Tyler, are you partly able to look at things like that because of your extensive work with co-ops and their extensive use of NISC that you're just really familiar with
Yes.
NISC's functions?
Yes.
Yeah.
Yeah. So, and we're the auditors for NIC.
Yeah.
Full disclosure.
Oh, okay.
We are their auditors, and we develop things with them, and they bounce stuff off of us for why and how. But yes, so one of the original things I do is, if you're chasing down cost accounting, you have all these cost pools that are going all over the place each month, and it's one of the things we want to check into is say, well, what's going into these cost pools and where are they going once you're hitting the buttons? And this particular thing, I noticed there was a lack of it. And so I said, well, how are y'all doing that? And then we got into that conversation from there. Yes. Sir.
Okay. Well, thank you. And again, for those who don't remember, when we were having auditing problems, it was primarily before we were using NISC and had fully implemented it. So it's interesting to hear how it covers all these different aspects of the business management and counting everything.
So cost accounting wise, I would, there's a few softwares that do it, but it's certainly a strong software out in the marketplace.
Okay.
As a full ERM, I don't know, but cost accounting wise, that's probably their strongest thing that you could point to.
Okay. Unless there's other questions, please continue.
Okay. So since they moved the treasury management from the county in-house, some important things moving forward, and certainly a big conversation I have is maintaining identification of restricted cash flows. So how are we going to do that when we move forward into 2024 and 2025? When the county used to just set up a new fund in their software, that was quite simple. And NISC, this is something where it's not as easy to do. And so really focusing in on restricted cash flows and showing that we're using restricted funds for the restricted purpose. And I think we have a place through conversations with Mike. I think there's a way to do that through NISC. It's just really focusing on if we're getting money for LUD improvements, we're showing that we're servicing any debt that's related to that LUD through those assessments that LUD may be receiving specifically. And that's a tedious process. So, but I think it was something that I was really focused on for this year's audit since it all came in-house.
Okay.
So an eye on the future, and I don't know if this has been talked about for 2024, but as you're doing a meter change out, it's one of the unique things for electric utilities that you can point at and say, en masse, we're changing these assets out. And so we need to look at, have we depreciated the old assets enough yet? So generally speaking, when you're talking about poles and wires and cross arms, we're not speaking at a level that's detailed enough to where we can say, have we depreciated that particular pole enough? But when it comes to meter changeouts, we can point at them and say, we had our last meter change out 15 years ago, and these had a 30-year life on them. So we're only half depreciated. And so as a part of this year's audit and communication with what y'all's plans were for 2024, I recommended that those meter depreciation rates be up enough to where you could avoid taking your loss on the retirement of those mass changeouts of meters. And so that financial impact should be seen in 2024's financial statements when you look at the depreciation last year versus this year. And if whoever's covering those with y'all, I think that should stick out to you when you're looking at the numbers.
Okay.
Yeah, Tyler.
Yes.
So this again might be for Mike. So a little more clarification on that last statement there. So we're talking about the depreciation of the old analog or cell net module meters only, or are we talking about also the depreciation changing that calculation for the new meters? Because we borrowed money for 20 plus years on those meters. If you accelerate the depreciation, how does that work? Or is there just a separation between the old meters versus the new?
There's a separation between the two meters. We're only talking about accelerating the depreciation on the old meters. The new meters, we will depreciate at the normal rate. It's only basically what we're trying to do is reduce our loss when we retire, do a mass retirement of the meters that we're getting depreciated because we've only touched a little bit of what the useful life of them. So it's only on the old meters. It's not on the new meters.
So yeah, it's on the AMR meters and the analogs. Thanks.
I appreciate the explanation on depreciation.
And so it's possible though, in 20 years, if that's the rate, that you might have this conversation again, depending on where you are, if it's 10. So just quick notes on grants. Grants are becoming a big thing here at the utility district, and certainly the requesting of funds and maintaining compliance over the grant programs is something that I think is forefront and center here at the utility district, especially with the ARPA money that was out there, the grant funds for broadband. There's a lot going on with the utility district's grant programs. And so just a note is when we were out here doing field work, it's probably not that fair because we're here early in January. So there's about 3 weeks maybe at most to get us information after close. And so I just wanted to highlight that we initially lacked the ability to create a schedule of federal awards expended. And so A19s and getting the money submitted timely is something we would highlight as one of the most important things we could put our finger on at the utility district. We want to make sure that as expenses are happening and within timeframes allowed by granting agencies, that grant funds are being put on A19s or whatever sort of request for reimbursement form there is. And as of the end of the year, it looked like maybe that was a little bit lagged. And so it's important that for 2024, we would see that to where it's timely and considerate of the grant program and the granting agencies. So I don't think that there was an entry or anything that we're proposing based off of that. We did have to true up your revenues once we got the final number. But as far as accounting wise goes, I think it's just getting those numbers on the A19 prudently and correctly, but as timely as possible. Some other two miscellaneous things is there's a few miscellaneous payroll withholding accounts that we're not clearing monthly. We've set accounting to investigate those differences and reconcile. Certainly, we think payroll withholding accounts are important because they're folks' withholdings, and we want to make sure that they're finding the right home once they're paid. And so it's something we communicated, and we want to make sure that it is done in 2024, and all processes are updated to where those things are flowing correctly, and we're ensuring that employee A's withholdings go to employees A's benefits. So that's something we're looking at. And then the last kind of thing is that unclaimed property records, as kind of finance was transitioning a few years ago, some of the records are a little bit gray there. The newer records I feel quite comfortable with when we're talking about unclaimed property. So in the state of Washington, we need to, if a check's not cashed to a vendor, it has to go to the state at a certain point, or we have to give the state notice that they didn't claim that check, and we have to keep funds on hand available to pay that check. So two processes, but just investigating the small differences we have there and getting that account reconciled is something we would really like to see for 2024's audit. And it's something we certainly communicated about today. What's the best way to go about that? And how do we do that to where we're in compliance with all the state of Washington wants from us or wants from y'all here at the utility district? So I think that's really the summary of the things that we're covering that maybe don't make it here sometimes. And so if there's any questions that, some of that's in the weeds, but, if there's questions y'all have there, I can come back anytime if you don't get the answer today, and I'd be happy to talk with y'all about any of those. So with that, I think we can get into a look at the results and some of the indications on the financial data that's included in the audit report. So the bound actual audit report for 2023. So this is a look at your cash sources and uses of cash for 2023's audit. You can see that our sources of cash are up in 2023, and our uses of cash are down in 2023. So some important notes here is that we really saw an uptick in grant funds received in 2023. If you look at the financial statements and specifically the audit report, so you're seeing that increase from approximately 9 million up to 13 million, and you can bridge that gap with the grant funds really received, as well as some slight increases in your revenue year over year based on usage if you looked at the analytical data. The big drop in your uses of cash for 2023 is really driven by one thing, and that is you drew down some debt. You haven't had debts in the prior year. You didn't draw down any debt, but you had 3 separate debt issuances in 2023's audit. And so when you're drawing down that debt, it offsets your debt service expenditures for the year. So your actual total for 2022 would have been approximately $13.5 million. And you can get from there to 2023 is really driven down by debt issuances year over year. If you look into the financial data, specifically an RUS loan, then we had a quasi grant loan program through the state of Washington, as well as the Quilcene water tank. So that's a pretty generalized look at your inflows and outflows of cash year over year, as well as I think the main explanations as you'll see the increases and decreases for 2023. Another big thing that's going on here is we get the new grants. You can really see that we have a spike in plant outlays. And so if you're looking at CapEx budgets or whatever it may be that's getting presented to you, you can see that, our revenues are up, but that's grant funds. A lot of those are geared towards the capital asset acquisitions we're making year over year, as well as some heavy investments in your utility plan, specifically the electric utility in the year 2023. So, I think those really go hand in hand if you're talking about the two, the debt as well as in grants, as well as your outlays. And I think that correlation speaks heavily of that for 2023. Up to approximately just a little over 15 million in 2023 from approximately 10 million in 2022. Year over year, look at your expenses on your income statement. So, when we're looking at this, we're looking at all your divisions combined. It's water, electric, and broadband. But you can see that you're really steady year over year, and except for 3 areas. And really the changes in those 3 areas, if you're looking at cost of power, operations and maintenance, and A&G, is you had a significant drop in your cost of power for 2023, which is a good thing. You know, anytime the cost of power goes down, I think that's a good thing for the membership and a good thing here at the utility district. And really, you can see that the operations and maintenance and A&G sections picked up that pretty similar numbers with increases for salaries, really being the driver of inflationary costs in 2023. But as well as that cost of power dropping, really giving it a bigger percentage of the pie for 2023's amounts.
Okay.
So with the new debt,
Tyler, and just to be clear, we saw that in 2023 and we'll see it again, not to the same extent 2024, because that represents the BPA credits that we were getting for the revenue, for the reserve distribution, correct?
Yeah.
So this isn't a trajectory, this is a blip. The 23 and 24 will be blips, just so that everyone's aware that that's not a trajectory.
Yeah, part of the reason the 23 power costs were down was because we did receive credits on our bills from BPA, power dividend. I don't remember the exact name of it.
Reserves distribution clause.
Yeah.
okay,
It was on the transmission side, about a tenth of what it is on the power side.
all right. And then we had the 3 new debt issuances, but kind of there's really no impact for 2023 due to the timing of the issuances. We certainly would expect interest as a percentage of long-term debt to increase as you move forward and you get a full year of debt service payments related to each one of those individual loan packages. You should see that increasing as we move forward into 2024. Interest as a percentage of electric revenue. So one of the big things in 2023 is that revenues were slightly up, but pretty much steady year over year. So really no change here. Just one of the graphs that we present for you all. I think an important one here is that electric revenue per customer, it was down in 2023 if you look at your total customer base year over year. So each customer paid a little bit less to the pot for 2023's financial statements, as well as investing in that bottom line net margin number or net income number here at the utility district year over year, down from a little over 2,000 a meter per year to slightly down, but still over $2,000 a meter per year.
And just a question for staff, does that correlate to weather? Do we have any idea of what that reduction was?
We assume weather, but we can go back and look.
Yeah, I would assume weather as well, but
And
it's hard to say.
I think there was a slight meter growth if we're looking at the numbers, but
Yeah.
not a huge number, but.
Yeah, there wasn't a lot. We don't have a lot of growth year after year, so.
Okay. Thanks.
And then looking at your collectability of your receivables. So one of the most important flows or processes here at the utility district is you bill people for services you provide. So how well are you collecting on those services you're providing? So you bill each month, and as of 2022 and 2023, no adjustments to your bad debt has been needed year over year. So the collectability here at the utility district has just really been outstanding if you're talking about results for those 2 years. And certainly the prior several years were certainly COVID and other things. So as we're coming out of that, we're seeing that the net utility receivable is properly stated year over year when it comes down to testing, and that collectability is really high here at the utility district. Electric revenue and power costs per kWh sold. So electric revenue per kWh sold is just that slightly over between 10 and 12 cents per kWh sold, and your power cost was under 4 cents per kWh purchased for the year, leading to some additional net income growth when you're looking at 2023 versus 2022. And certainly, I think you alluded to that in the cost of power discussion, but those rebates have an impact on the cost of power per kWh sold, and then slight increases in that electric revenue year over year, but pretty steady.
In your chart there showing electric revenue per kilowatt hour sold implies that if we've got less revenue and our amount that's being collected per kilowatt hour is going up, that we're selling less. You
Yeah.
know, so Kevin's comment that, yeah, it probably is weather related is, yeah, it probably is weather related. Because we were charging more per kilowatt hour, collecting
Yeah.
more for it, but we were just selling less.
From those rate studies that you've implemented with the year-over-year changes. And then, so we are still seeing the spike in your net position by years. So if you're looking at financial needs availability, and you're looking at your financial statements and you're pointing to that net position and saying, well, how are we needing debt or whatever it is to finance these capital asset investments? And we're still seeing these net position by years growth when you're looking at our financial statements. I would tell you that, you know, it's not apples to apples across electric utilities and net assets, and net position is one of those conversations that has to be had. Because what, you know, if you're looking at another electric utility that's not under GASB, which is y'all's generally accepted accounting principles here at the utility district, grant proceeds and are recorded as reductions of plan investment. Here at the utility district, they're recorded as revenue. And so what that leads to is a pretty long-term disconnect between depreciation expense and the revenues associated with that depreciation expense. And so in the long term, over 30 years, you would expect net position to increase, but come back down accordingly to where you would have been pre the projects that had the grant income. The spike there is really still driven by, yes, you had net income increases year over year, but really still driven mostly by the grant income posted, and the difference between that being a revenue and your plant investments being recorded on the balance sheet as a deferred expense. So they will catch up to each other, but I would expect to see that in the near term, really till you get about the 15-year mark of operating in this manner, until it would start coming back down. Okay, I think so. Reading the audit report, I think that's the important information for me and the takeaways I have when I read the financial statements. If y'all have anything based on what you've seen or otherwise, I'd be happy to go into those sort of discussions with you all now or at a later date, however y'all like to approach that.
Well, I have a question about the financial statements. When you say your firm is preparing those, is that the ones that we're getting monthly in the?
No.
That's not them.
So I prepare the monthly financials. So the year-end report, that big packet that the commissioners will be posted now, that it's been, we waited until it was presented to the commissioners before it went to our website, because you guys need to see it first and have Tyler come in and talk about it. That's what they're putting together, the year-end packet of information that I send to the commissioners. I send it to RUS.
Right.
I send it to the USDA Rural Development, the ones that
Okay.
we send out to everybody else. That's the packet that those are the statements that they're preparing.
And is that part of the Form 7 or is the Form 7 something?
So Form
different?
7 is separate. I use the audit report to help complete the Form 7 and
Okay.
it goes with them, but the Form 7 is the RUS. That's how we report the financial statements to RUS.
Okay.
That information was compiled and used
Yep.
as
Understood.
what goes into what we track.
Yeah. Fill in the boxes for the RUS. Got it.
Well, if there's nothing else, I'd like to give a shout out to my team, Melissa Blair, our financial services manager, Amanda Isaac, the accounting specialist, Teresa Guys, Morgan Higdon, Kathy Palmer, accounting associates, who have done a really great job over the last year. Kathy, Morgan are both still fairly new. They really stepped in last year to help out and do things. Teresa was out for a little bit last year, so we kind of threw Morgan into doing a few things right away. A lot of it's the audit. So I'd like to shout out to that team. They're doing a good job on how we're doing things. Amanda and I did spend some time with Tyler this morning to go over things, because we are really trying to figure out how can we make NISC work for us and us not work for NISC as much, and just keep improving on things and working with Will and his team on the 819s and how to, make sure we're getting balanced out on those. So I'd like to give a shout out to my team that they are doing a great job, and they are a big part of the reason why we get these clean audits, because they help make sure they track down a lot of stuff for us. So I just wanted to make sure to give them a shout out as part of this.
So next steps, timeline, when will it, so do we yearly or 2-year contracts? How do we work this? I know we had Jackson Thornton before. So what's the process moving forward? When do you plan on starting the 2024 audit? So.
Well, that is part of the discussion. I hadn't been Tyler and I talked about this a little bit today. I hadn't really talked to Kevin. I think staff, I would like to engage with BSG and with Tyler and his team again next year for the 24 audit. It's an engagement letter. So as long as the board feels comfortable, because you guys do have the fiduciary responsibility. You guys are ultimately responsible for this audit report and everything that happens with it. I think Kevin, I know he's enjoyed working with BSGM and the stuff that they've done. I think he's probably okay with us re-engaging. So it's just a matter of telling Tyler, yes, let's engage. We want to engage again, get the letter signed so they can. They'll be up here. One of Tyler's team will be up here in October if we do move forward to start preliminary field work, doing some inventory counting for all inventories. And then they would be back out end of January to start to do the actual field work for the 24 audit.
So just again, on process as a reminder, so because this is a fairly low threshold of a contract, is this something that doesn't have to be competitively bid? What was the process again?
Usually, like when we did Jackson Thornton, it was a 3-year, if I remember right. They only completed, or maybe it was more. Well, no, we extended it. That's right. And then they called and told us we couldn't. This one, it's not really, it doesn't have to be. I don't know the competitive bid laws if we have to. Tyler and I did talk if we want to, I like working, Tyler works great with us and we've learned a lot from him. He's learning a lot from us, using him and his team to continue to do it. We talked 5 years is probably about a good time to look at it if we need to, but it's how the board feels with things. It's how staff feels with things. So I don't know how Kevin, if he has anything to.
As you know, we engaged them early on 2 years ago because we literally couldn't get anyone else to come in.
Jackson Thornton basically said, we can't do it. We've lost our staff.
Yeah.
We cannot perform and
Yeah.
and you guys came in and pinch hit really fast and did a great job. And I guess from my perspective, it's like, I feel like we're getting more for our money than we were, for example, with Jackson Thornton. It seems like the work you're doing for us, it just feels more thorough. It feels like you're able to look at more of the processes that are applicable to us through NISC and other things. It just feels like we're getting more from my perspective. And I think partly that's your experience of working with co-ops and that we're built a lot like a co-op in terms of the systems we're using. So yeah, it seems like it makes sense to me.
Yeah, and we'll bring back a recommendation in an upcoming board meeting after we do our review and talk to the commission about how best to move forward.
And what I recall was we got Jackson Thornton through some sort of request for proposals or some sort of bid process. And it seemed like there was 2 respondents and we picked them and then they kind of fell out after a couple of years.
To be honest with you, BSGM, Adam Bailey, who is a partner.
Yep.
Actually did bid.
Oh, okay.
But we chose at the time to go with Jackson Thornton.
Yeah. And they were probably a little lower bidder, but then we
I
got
think they were a little bit lower.
We got a lot-
I wasn't involved in that, but
a lot less service than we got no service. So yeah.
Adam Bailey is still with.
Yeah, certainly. We have 8 electric utility partners. So, and we have folks that, they're not me that can do this work for y'all.
Mhm.
And so we have a lot of options, certainly. But we would defer to y'all. Y'all make whatever y'all need to do. We're happy to assist on our
Well,
side, whatever you require.
I just like it when.
Excuse me, I'm
smoke-
sorry to jump in and maybe divert you a second, but is on discussion a motion to accept the audit, Mike?
We don't have anything on there.
No, there was nothing. They were just asking what the next steps were, Joel.
No, but there was a presentation. Has the board already accepted the audit?
Yeah,
Oh, no.
Well,
So
don't you think we should have a motion that the Board of Commissioners accept the audit before you talk about next steps?
No, it wasn't. Yes, we probably should, Joel.
okay.
So I
That would
move
be
that,
my advice.
You know,
I move that the Board of Commissioners accept the audit from Bollinger, Seagard, Gilbert, and Moss.
Hey, Kevin, can you hold on just for a second? Because Kevin's wants to weigh in
Well,
here.
there's no second.
It'd be,
So we have a motion,
I'm
but
not sure because it's not on the agenda. Joel, can we have a motion? I just want to clarify.
Well,
that.
it was to, the agenda item was to review the 2023 audit, right?
right.
Oh, it does say.
It does actually, no, it's,
It
yeah.
Yes, it says approve a motion.
So I'm sorry, I hate to be
Oh,
a stickler, but I think we should actually do that.
On the agenda, it's just the PUD 2023 financial audit.
I'm comfortable that the notice is fine on the agenda.
Okay,
And the information's already been passed on to the state, correct?
yes,
Yeah,
they have.
so it's not like,
This has not, as Mike has correctly said, this audit is for the PUD. It's not for state purposes. I'm sure the state auditors like us to have an independent audit, but it doesn't replace what the state does. Those are different types of audits. So I'd still recommend, sorry, Kevin and Mike, but I still recommend that the commissioners actually make a motion to accept the audit
Joel, we
results.
had issues that even though they seem small to us procedurally were concerning to other people. I'm wondering, could we simply add it to our regular meeting agenda,
agenda.
which is at 4? Because we can add things to that agenda, just refer, hey, we had a presentation and we'd like to take action on it.
At your preference, yes, that's
Okay.
fine.
I think Kevin would prefer that, and I think I'm fine with that too.
Thank you.
I'm gonna defer to Joel and you guys. I'm good.
I'm good with that, Commissioner Randall.
So we didn't second Ken's motion, so.
Yeah, Ken, are you
Well,
fine?
yeah, I'm fine with it. I'll withdraw the motion for now and submit it again in the
Perfect.
regular board meeting.
Agenda for the next meeting, that would be the time we could add it. Okay. So, yeah, so think about the motion and how you like us to make that,
Okay,
Mike, between now and the next meeting. And then so it sounds like next steps will be talking about engaging your firm again for next year's audit.
yeah, we'll put it
Staff is-
probably on the, either add it to the next one or add it to the 20th.
Yeah, we'll add it to the 20.
Okay.
Okay, staff will work on that. Great. Yeah, and Mike, I would just second, appreciate how the financial staff has become more capable over the years. And I think of it as like a smoke in the kitchen. You never want like kitchen fires. And I think of when we cannot produce clean numbers and it's like smoke in the kitchen, it's bad. It's like a restaurant never wants to have the kitchen on fire. And that's kind of what it felt like as a PUD when we were having trouble with audits and records and so forth. And it's just nice that it's been smooth, and I realize there's a lot of work goes into that, but we appreciate it.
Yeah, and I forgot to give a shout out to Melanie too, because she's been working with Melissa on some of the payroll stuff. So I forgot to.
It's a team
give her
effort.
credit. Yes, it is. And it's been a very big team effort on getting a lot of the stuff that Tyler has noticed to get cleaned up. So.
Okay. So did we have anything more to cover in this meeting?
No.
All right. Well, I would propose that we have completed our work and we can take a brief break before our 4 o'clock regular meeting. So thank you again, Tyler, for traveling up here. I hope you have a safe travels back. And it's 3:49 and we are adjourned.
Thanks, Tyler.
Thank